Hello and welcome to this video tutorial which explains how Black Box trade the DAX each day. This video assumes that you have already read and are familiar with the concepts explained on the following pages of the website: the Black Box Trading Edge, the Price Action Grid, and MABs and FIB cons. We also recommend that you have watched the following video tutorials: the Trade Tool, overlaying the Price Action Grid, and the DAX custom setup. The purpose of this video is to describe the process that we follow each day when trading the DAX. Before trading, we always check the economic calendar, which is available from the Forex Factory website, for any scheduled economic news announcements. Unlike the Forex pairs, the DAX is generally less susceptible to news announcements. The obvious exceptions are non-farm payroll on the first Friday of each calendar month, FOMC announcements, and interest rate decisions. In addition, we read through our trading plan and affirmations, review the gallery of quality setups, and perform our visualization techniques to prepare ourselves for the trading session ahead. Although we recommend a minimum of two 24-inch widescreen monitors for the trading environment, if a third monitor is available, it can be used to display your trading plan along with quality setups, both of which can act as a reference throughout the trading session. The morning session of the DAX opens at 7 AM GMT, and the GKFX spread varies throughout the day as follows. Between 7 and 8 AM it is 2 to 2.1 pips. Between 8 AM and 4:30 PM it is 0.8 to 0.9 pips. Between 4:30 and 9 PM it is 1.8 to 1.9 pips. And between 9 PM and 7 AM it is 4 to 5 pips. However, the broker can also vary the spread depending on market volatility. Blackbox provide the option to display the spread and set a user configurable maximum spread limit for the MT4 install. The trade controller will block trade entries when the maximum spread limit is exceeded. By default, the maximum spread limit is disabled, i.e. set to 0. As can be seen here via the BSS info script, where the first parameter is the current spread and the second parameter is the maximum spread limit. For the purpose of this demonstration, let's change the maximum spread limit from the default value of 0 to 0.5, which translates to a value of 5 for the DAX when trading with GKFX. This can vary depending on the market and broker. Right-click the chart and select Expert Advisors, Properties. Then double-click the max spread limit value and change it from 0 to 5, and click OK. As can be seen, the maximum spread limit has changed from 0 to 5. Since the current spread is 0.8, if we try to enter a trade using the trade tool, it will be blocked. And a message is displayed in the top corner of the chart to inform the user that the maximum spread limit has been exceeded. The Black Box Trading Edge is based on specific price action chart patterns that form regularly as price moves up and down. When these patterns form, our trading edge is in play, providing potential trade opportunities. Black Box specialise in trading the DAX intraday and utilise 2-hour money management rules, where the intended profit target is twice the amount risked. We trade from the DAX intraday profile from either the 1-minute or 5-minute charts, using the trade tool in conjunction with the pending order tools, enabling trades to be entered live at the market, applying user-defined trade money management settings. Since we typically trade during the morning session, we tend to set the spread limit to around 1.2 pips. Although the market is open at 7 AM, we generally do not trade until after 8 AM, when the spread is reduced from 2 to 0.8 pips, since the lower spread lends itself to our style of trading. Let's now look at the two specific chart patterns that are at the heart of the Black Box Trading Edge. The MAB and FIBCon patterns form regularly on the charts on all timeframes and provide high probability trade opportunities. The chart pattern comprises a price breaking out from a previous level of support or resistance to make new highs or lows, followed by price retracing to a significant level, often confluent with the 50 to 61.8 FIB levels and/or the moving average, where it reverses, then continues in the direction of the breakout. This ABC chart pattern, or impulsive corrective move, can be seen again and again on the charts across all markets and with experience can be traded profitably. We have called these patterns the MAB and FIBCon, where MAB stands for moving average bounce and FIBCon stands for a combination of Fibonacci and confluence. These patterns are essentially the same in that they form the ABC chart pattern as described, the difference being whether the 21 period exponential moving average is involved at point C, where price retraces to and then reverses. It is important to note that the ABC chart pattern is a pure price action pattern that forms due to the confluence of different types of support and resistance. Potential trade opportunities are in the same direction as the impulsive AB leg. Confluence structure must be present to support any potential opportunities. As traders, we should anticipate price movement, not react to it. Therefore, once an impulsive move has occurred, we need to determine where the market is most likely to reverse, i.e. point C. So let's demonstrate the process for doing this by using the following black box custom objects: the FIB tool, the FIBCon labels, the up and down arrows, and the trade tool. Once an impulsive AB leg has occurred, we use the FIB tool to determine the 50 and 61.8 levels, or golden zone. The FIBCon labels and arrows are used to mark up the chart in a consistent manner, providing guidance as to the potential price action pattern we are looking for. Then we mark up any zones of support and resistance on the impulsive AB leg. Price will often retrace to a zone that previously acted as resistance prior to the impulsive leg breaking through it. When this occurs, the zone undergoes what's known as a role reversal, such that it now acts as support when price retraces to it. If the role reversal zone is confluent with the golden zone, there is a high probability that price will reverse and move back in the direction towards point B. When trading on the lower time frames, where the market often moves quickly, the window of opportunity at point C is often short-lived. If after the AB leg forms, price retraces to the role reversal zone, and additional confluence is present in the form of the 21 period EMA, Fibonacci levels, or additional price action grid structure, then our edge is in play. Trade entry is at point C, with the initial target being point B. Good quality MABs and FIBCons often produce at least 2-hour trades, where the reward is twice the risk. As can be seen here, the role reversal zone is confluent with the 50 and 61.8 levels, and we have additional confluence with the 1 minute moving average and the 11,600 level. So, the trade tool has been positioned such that if price retraces to the role reversal zone, we can enter a buy trade live at the market. As is the case here, the trade tool can be used to mark up trade entry, stop loss, and profit target levels with precision and accuracy. It automatically calculates position size, ensuring that only the allocated percentage of the trading bank, as defined by the user, is risked on any one trade. Trading is all about probabilities, and no trade is ever a dead cert. However, in our experience, high energy, high probability trade opportunities occur when our trading edge is in play, and the more confluence the better. Since prices retrace to the role reversal zone, we have entered a buy trade live at the market. So let's see what happens. Okay, On this occasion, the trade played out as expected, and our 2-hour target, which was just above point B, has been reached, and the trade controller has automatically marked up the result on the chart. The trade console has captured the details of the buy trade and the resulting 2.14R winner. The ABC chart pattern is the result of a build-up and release of energy which happens repeatedly on all markets and all time frames. Learning to identify and trade this pattern will come with time and experience and can potentially be very lucrative. The last and an important part of how we trade the DAX process is the review and analysis of our results, which is an essential part of a successful trader's routine. The review and analysis process should be performed at the end of the day's trading session and at the end of each week. This vital part of the process provides the necessary feedback loop for traders to learn from their mistakes and identify any bad habits they may have developed. It also helps to highlight and reinforce their successes and build confidence moving forward. The Black Box Trade Controller has been designed with this in mind, as it automates the trade journaling process and provides an interface for the review and analysis of trade results and overall performance. Thank you for taking the time to watch this video.